That's what we're gonna do in this video. I will show you how to open an account. Then we're gonna talk about spot trading versus trading derivatives. I will actually show you how to open trades, how to place stop losses, how to close trades. I will show you how to do it trading spot and also how to do it with leverage. And lastly, I will introduce you to the bots available on the BloFin exchange. They have great bots, and if you want to earn passive income and crypto, or if you simply want to just automate your trading, because there are a million benefits in doing that, I will show you how to do it using their bots. Their bots are completely free. So without further ado, let's jump straight into the action. To open an account is very easy. All you have to do is go to their website blofin.com, then click on sign up right here, add your email address, password, then click right here to add referral code, and you can add SATS income. By doing that, after you add the referral code right here, then all you have to do is click on I have read and agree to their terms and sign up. The process is pretty straightforward and I have to do it. So after you create your account, you're gonna land on this page, and here is what are the different options. You can trade spot, you can trade futures, and also you can use their trading bots. I'm gonna show you how to do all of this, right? But first let's talk about the differences between trading spot and trading derivatives. The two main differences are that when you trade spot, you can't use leverage. Basically, you cannot trade with more money than you have, and also you cannot short. You cannot make bets that the market is gonna go down and profit out of this. You can only make money when the market is going up. When you trade futures, obviously you can use leverage and you can make money when the market is going down. So let me give you some examples so you can better understand this. That's my YouTube channel and I'm posting my trades here. So we're gonna look into some trades because I want to show you what difference the leverage can make. Before we do that, let me tell you something else. If you are a complete beginner, it's always best to start trading spot. You can switch to trading derivatives, trading futures only when you have lots of experience, right? Because if you don't know what you are doing, well, trading with leverage will lead to you losing your money very fast, right? So again, for beginners, the best way to start is trading spot. Once you gain experience, to switch to derivatives. Now I want to show you what difference the leverage can make in your trading. So let's open this trade right here and see what we have here. If you are a complete beginner, all of this might be confusing, but I'm gonna break it down for you. So we have here the pair. This is Bitcoin USDT pair. We have here the leverage, that's 20x leverage, which means that I am using 20 times more money than I actually have. To get an idea of what this means, we have to go down here and look at the size of the trade and also the margin. So the size is the amount of money that is in this trade, while the margin right here is the amount of my own money that is in this trade. And there is a difference here, right? So these are my own money, $17,000. This is the total amount of money that I put into this trade. This is basically the difference between trading with leverage and trading without leverage. If I'm trading without leverage, the maximum amount of money that I can put in this trade is this amount that I have right here, $17,000. Since I took this trade with leverage, I actually put $341,000 in this trade. But again, out of this $341,000, only $17,000 are from my own money. The rest of this is basically money that I borrowed from the exchange. Let me bring the good old calculator and you will see the difference. So the total money put in this trade is $341,260 minus $17,057 of my own money. So basically I borrowed from the exchange $324,000. I borrowed $324K from them plus my $17K. I put into this trade a total of $341K. Now let's do something else so you understand what the difference is here. Let's say that the trade goes in my favor 5%. If I trade without leverage, if I trade spot basically, I can only enter a maximum of $17,000. I can put a maximum of $17,000 on this trade because I cannot use leverage. So $17,000 times 5%, that's $850 profit, right? So the trade goes in my favor 5%, I made $850. Now let's look at the example where I'm actually using leverage. So I actually put in this trade $341,000. So now 5%, the trade goes in my favor 5%, well, I actually made $17,000 in profit compared to $850 in the previous example. So you see here the difference between using leverage and not using leverage, right? In the example with the leverage, I just doubled my capital, right? With this one trade. In the example without leverage, I just made $850. Yes, $850 is not that bad, right? It's still something, but it's far away from $17,000, right? And I just gave you an example with the trade going 5% in my favor. The reality is that the bigger the percentage, well, the more the profits will be because it's compounding. Now, what is also important for you to understand is that there is a lot of risk in doing that, right? Because you can actually end up losing all of your capital, like I already mentioned, much faster compared to if you just trade spot. So if you don't know what you are doing, that's not something that you should really do. And to give you more clarity on that, let's look down here, right? So we have entry price, we have mark price, and we have liquidation price. So the entry price is basically the price at which I entered this trade. The mark price is at the current price at the time of me recording this trade, right? And the liquidation price is basically the price at which I'm gonna get liquidated and I'm gonna lose all of my funds. All of this I will lose if Bitcoin in this case went down to $16,000. 16,418 to be precise. So I entered 18,751, and if Bitcoin didn't go up but it actually went down, I could have lost all of my money. So again, if you don't know what you are doing, you guys should not really be playing with leverage. But I'm showing you this example so that you see that once you master this, you can literally turn a small amount of money into something huge. Now let me show you another example. The previous trade that I showed you, I took it on Binance, on the Binance exchange. This trade that I'm going to show you now, I took it on the Bybit exchange, right? Bybit is also a great exchange. This is a more recent example where basically I entered Bitcoin at $58,616, and at the time of me recording this video, Bitcoin was at like $89,000. This is the profit right here, which you can see, and this is the leverage. So what we care about in this example is the leverage. Again, you have to understand the difference that leverage can make. So in this case, I use 10x leverage. The position size, it's 5.437 Bitcoins, right? So we have to bring the good old calculator in order to calculate how much is this. So 5.437 times $58,616. So the position size in this case is very similar to the position size of the previous trade. It's $318,000. But the thing is that here I actually put down 10 times less money, right? Because this is the position size after the leverage. Before the leverage, if we divide this to 10, because I use 10x leverage, we come up with the actual amount of capital that I put in this specific trade. I put just slightly below $32,000. So with 31K, I made that much. Not that bad, right? But again, this was possible because of the leverage. Without the leverage, if I just entered $31,000 position size, I was still going to make a decent profit, 16-17K, but it's nowhere near this. So now you understand the first main difference between trading spot and trading derivatives, that is the leverage. The second main difference is that basically when you trade derivatives, you can actually make money when the market is going down. You guys have to understand that the crypto market moves in cycles, right? You have bull markets, then you have bear markets where the market is going down. We have bull markets, then we have bear markets. Bull markets, bear markets. So if you want to trade full time and if you want this to be your main source of income, you have to learn how to trade derivatives, right? Because otherwise you will only be able to make money during these periods of time, but you actually lose your shirt during these periods of time. And you're not really gonna be able to rely on trading to cover your expenses, because these periods of times, by the way, we're looking at the weekly chart. You guys might think that this is like a few days or something like this, but this is actually like 595 days. So that's like 2 years. So yeah, you will be making money during this year and a half right here, but then for the next 2 years, if you don't know how to trade derivatives, well, guess what? You're not gonna be able to make any money, and not only not gonna be able to make any money, but you're very likely gonna lose your shirt, because you're gonna try to do the same thing that you were doing here, but the problem is that what you were doing here is not really gonna work here. So you're actually gonna end up losing very likely all of your profits and maybe even your initial investment. That's why you have to learn how to trade derivatives, shorting the market, and you can make money when the market is going down. Now I want to show you some examples again from trades that I posted on my YouTube channel. This one right here, $260,000 short trade. Let's open this and check it out. So I'm using Binance, as you guys can see right right here. Let me see if I can remove these subtitles. Okay, so I'm using Binance right here. This is my account equity and this is the debt, right? What is account equity and what is the debt? Well, the account equity is basically the amount of money, of my own money, that I put into this trade. I put $59,000 of my own money, right? And then I borrowed $240,000 from the exchange. So basically this is the leverage that I use. So I put 2 Bitcoins, 2 of my own Bitcoins, as you can see right here. And then I borrowed 8 Bitcoins from the exchange itself in order to short it. And as you guys can see, the profit here in like 7 days is almost 1 Bitcoin, $22,523. Here I believe I will actually show the trade. So I entered this short when Bitcoin was at like 32,000 and then Bitcoin went down to like 29,000. So basically it went down and that's how I made money. Again, you guys have to understand that you have to learn how to do this so that you can make money during these periods, right? Bitcoin went down from almost 33,000 to 29 and I made this amount of money. Everyone else who was trying to trade long, who was basically buying, they lost money during this time because you can see that it kept going lower and lower and lower. Let's see if we can find another example for taking a short trade. Right here is another short trade. Let's look at it. So what do we have here? Well, we have the size, the position size. So by the way, it's a little bit hard to see from all these signs right here. The position size, we have the margin, and then we have the entry price and the mark price. So what is the position size? Well, all of this, by the way, is in Bitcoin, right? It's not really in dollars, so you might be confused. What is this 0.57? Is this like less than $1? No, that's not less than $1. That's the unrealized P&L in Bitcoin, right? So that's 0.57 Bitcoin profit, right? The margin is the amount of Bitcoin that I put into this. So I put like 1.48 BTC right into this trade. And the size, the actual position size is 11.89 BTC, which you can see right here. So by the way, if we just get actually we don't even have to do the calculation because I put it here in the title. It's $180,000 Bitcoin short. So this is the size, this is the entry price, which it's hard to see right here. Let me see if we will be able to see. What is it? The entry price is hard. 16,500 or something like this. And the price at the time was like $50,600. So Bitcoin actually just dropped like $1,000. Not something significant, but I still made good profit because the trade was like very big size, 11.9 BTC, 180K. So the leverage that I used here is 8x. So I put 1.5 BTC, which is like what? 23,000 something like this. So 15,500 times 1.48, so like 23k of my own capital I put into this, and the rest I borrowed. So I borrowed, the total position size is like 11.69 times 15k, so the total is 180k. So I put down just 23k, the rest of it I borrowed. I basically used leverage and I made decent profit. This, by the way, is a great strategy when BTC is very close to the bottom, right? You see that Bitcoin was down here was like 15,000. That was actually the exact bottom. So what I was doing at the time was that I was trading to earn more Bitcoin, not more dollars, as you guys can see. That's a great strategy because now 2 years later, right? 2 years later, Bitcoin, as you guys can see, is already $106,000. So this 0.57 BTC that I earned at the time this was just nothing, right? It was just like 8k, but 0.57 BTC now at 106,666, it's like 61k, right? So you see here what I was doing. I was basically trading to earn more BTC because I knew that in a couple of years this will happen, right? So that's why also these market cycles are important for you guys to understand, so that you know when to do this, when to do one thing, when to do another thing. You cannot just do the same thing all the time, right? You have to apply different strategies for different time. So basically this trade that I just showed you, it is from this exact time right here. So basically I was squeezing this last juice right here from the bear market to make the most money possible, to make the most BTC possible, because I knew that then this is coming, right? You see, I wasn't trading to earn more dollars. Why trading to earn more dollars when I know that this is coming, right? No, when I know that this is coming, I trade to earn more Bitcoin, right? I trade to earn more dollars when I know that this is coming, right? So at these times right here and these times, I trade to earn more dollars, and during all of this, I trade to earn more dollars, and then at the very bottom right here, I convert all of these dollars into BTC, and I start trading to earn more BTC, and then bam, this happens, and that's how you make good profits and you have good performance in trading, and you do this as full-time job, right? You don't just do it on the side, right? Because if you want to do it as a full-time thing, you have to do it properly and to be able to at least to cover your basic expenses. So let's start with trading spot. Click right here and you will be brought to the page where you can actually execute trades. The user interface is pretty standard, right? So we have here the pair at the top left corner. We have the price, we have the 24-hour change, all of these nice things right here. We have the chart. Right here is the order book, trade history, and the panel where you actually execute trades. Down here is basically where you transfer funds in order to start trading, and here is where you're gonna be looking at your orders once you have orders, right? So let's start with transferring capital, because that's the first thing that you have to do in order to start entering trades, right? You have to transfer funds. At the moment you can see that we don't really have anything right here, so I'm gonna click on transfer, and basically we're gonna transfer USDT, right? If you want to transfer something else, where you're gonna select from the menu right here. Let's say that you have USDC instead of USDT, where you're gonna select USDC, right? In this case I have USDT, so we're gonna transfer it from the funding account, where basically the funds arrive when you deposit it from another exchange to your BloFin account. So from the funding account to the spot account, right? Later on we're gonna trade futures, and I'm gonna show you how to transfer it to your futures account, but for now we're gonna transfer it to the spot account. The amount, we're just gonna transfer this $1,000 that we have here. So add the amount right here, click confirm, and now we can already start entering trades. So how do you enter a trade? First thing first, when you trade spot, as you guys already know, you can only trade to the upside. So basically you can only enter trades where you bet that the price is gonna go up. You can only buy, basically, you cannot short sell. So to enter a trade you have three options right here. You have an option to enter with a limit order, with a market order, or trigger. So what are the differences? Well, you enter with a limit order when you want to enter at a lower than the current price. So the current price of Bitcoin is $106,000. Let's say that you've done some analysis and you believe that Bitcoin will go down to $103,011, right? And then from there it's gonna go up. Well, what order type are you gonna use here, guys? Well, of course you're gonna use limit order, right? Because you are entering at a lower, you want to enter at a lower than the current price. So add here the price at which you want to enter, add the amount of Bitcoin, right? So let's say that I want to buy 0.005 at this price, which is like $515. So you can either, by the way, enter the amount of Bitcoin, or you can just enter the dollar amount. So let's say that I actually want to buy Bitcoin worth $100, right? I want to enter a trade worth $100 when Bitcoin goes down at this price. Well, I don't really have to start calculating what's the amount of Bitcoin that is equivalent to $100 at this specific price. No. Just you put here the dollar amount that you want. That's it, right? So once you have this figured out, click on buy BTC. They're gonna ask you for order confirmation. You check it real quick. The price, this is the price, yes. This is the amount. If you don't want to see this anymore, just click right here and click on confirm. So now if we scroll down here, you can see that we have open order, right? This is the order time. Right here is the pair. The side, it's a buy side. We have price right here, the amount, the filled amount, and the total amount. Of course, nothing is really filled because Bitcoin is still at this price, right? The order value, $199. And yeah, that's pretty much it. From here, you can either cancel this order if you want to cancel it, or you can just let it stay. Now, what's important for you guys to know is that if Bitcoin just skyrockets from here to 200, 300, a million per coin, right, and it never goes down to 103,000, this order will stay here forever, and that is totally fine. What's some people who are beginners don't understand is that they don't really get charged for this order, right? You don't really get charged. You only get charged if the order gets filled. Actually, let me put back the order for a moment right here so I can better explain you. So here is the order. Okay, am I being charged any fees for this order as it is right now? Not at all. Why? Well, because this order is not filled. You only get charged trading fees when the order actually gets executed. When we move later to futures, you will understand that when you trade futures, there are actually two types of fees: trading fees and funding fees, right? Funding fees are the fees that you pay for the leverage that you use. Of course, when you borrow money from someone, everyone wants to get paid, right? Everyone is going to charge you interest, right? The same is when you trade crypto. You're not really going to borrow for free, right? You're going to be paying interest, and the interest is going to be every 8 hours. This is for trading futures. For trading spot, you don't really pay any interest because you're not borrowing anything. You only pay trading fee, which is basically the fee to open a trade and to close the trade. And this trading fee, you only pay it when the order actually gets executed. Having said that, let's move to the second type of order, which is a market order. A market order you use when you want to enter at the current price. When you want your order to actually be executed, that's when you use market order. So if I put right here $20, let's say that I want to buy Bitcoin worth $20 right now. The moment I click BTC buy, this order will be executed and I will buy this Bitcoin. You see that I don't even have the option here to put what price I want to buy at because I don't have the choice here. When I use market order, I am entering at the current price, whatever it is, right? So basically the way this works behind the scene is that I am buying, you see right here, the order book. We have the guys who are selling Bitcoin at the top, this red one right here. These are the people selling Bitcoin. And we have the big boys that are buying Bitcoins right here at the bottom, the green one. So when you use market order, the way this works is that you are buying from these very first people right here, from the first sellers at the lowest price, the closest to this price right here. You're gonna be buying from this guy right here. And as long as you don't buy like some crazy amount, it's totally fine to use market order because there are always gonna be some sellers which are gonna be around this current price. So you see that the buyers are right here at like 636, so 106, 636. The sellers are at 106, 639, so $3 difference. That's not really a big of a difference, right? Does it really matter if you buy at $3 difference per one Bitcoin, right? So unless you are buying like some crazy amounts, where there is another complication when you buy crazy amounts, because when you buy crazy amounts, if there are not enough sellers right here, the price is actually gonna go up way higher. But for Bitcoin specifically, that's never really gonna be a problem because I don't expect you guys to come up with some crazy amount of capital, right? This only is a problem when you actually trade some low liquidity coins, right? So if you go on BloFin and you search here, you go down and you search for, like, let's see, you go to like the lowest volume. Some of these coins, that's where you might run into problems if you just use market orders. But if you use market orders on coins like Bitcoin, Ethereum, XRP, Litecoin, all of these things, BNB, Cardano, Tron, right? If you use market orders on these coins, you're never really gonna run into problems. Just remember that if you are trading some meme coin that has like $5,000 of volume in 24 hours, well, then it's not really a good idea to use market order, right? It's better to stick to a limit order always, right? With these low liquid coins, it's never a good idea to use market orders. So this brings us to the third and last type of orders that we have here on the BloFin exchange, and that is a trigger order. A trigger order you're gonna be using when you guys wanna buy at a higher than the current price. Now, you remember that the limit order we use when you want to buy at a lower than the current price. So let's say you want to buy Bitcoin at $101,000, where you're going to be using limit order. But if you want to buy Bitcoin at $108,000, while Bitcoin at the moment is $106,000, which it is right now, well, guess what you're going to be using? You're going to be using trigger order. And now the one of you who are total beginners, you guys might start saying like why in the world we want to buy Bitcoin at $108,000 if right now it's $106,000? Well, that's a great question, right? If you are a total beginner, it's a great question. I totally understand it. But experienced traders, they know that you might run into this scenario, and depending on what your strategy is, you might actually be running into this scenario very often. So for example, let's say that you are trading breakouts. Well, I mean, I'm just gonna do like quick TA right here. So this is a resistance right here, as you guys can see, and this is a little bit actually of an ascending triangle. So let me see if we can. use some drawing right here on the BloFin exchange. So just real quick, without getting into too much details, this right here is an ascending triangle. So you see the price is making higher lows and equal highs. Well, if you are looking at this like this, so basically you identify this pattern. By the way, let me just hide this so you guys don't get confused. So if you are looking at this triangle and Bitcoin is $105,000, and you know that when Bitcoin breaks above 106, it will actually go up, right? And it will go to like what, 109, something like this. So if you know this, right, and if this is your specific strategy, I'm not saying here that this is a great strategy, guys. I'm personally not trading this strategy. I'm just giving you an example for a situation where you might use trigger order. So if this is your analysis, well, are you really gonna sit in front of the charts all day and waiting for Bitcoin to break out? Well, you might, right? But also you might go to sleep, and then this might happen while you are sleeping, and then you will miss out. So in this type of scenario, what you're gonna do is you actually gonna place an order to enter Bitcoin slightly above this resistance right here. So basically, if Bitcoin actually breaks to the upside, you're gonna enter the trade even if you are sleeping and you don't really have access to the chart, or if you are at work and you don't really have access to the charts, right? So in this case, BTC during this time, as you guys can see, if you want, I will actually bring it like this, 104K, right? So Bitcoin was at like 104K. You're gonna come right here and you're gonna place order. If BTC goes to like 106,300, you wanna enter with the market order, right? So you don't really touch anything here. The amount of money that you're gonna put in this trade, let's say $200, right? So then all you have to do is just click buy right here, and an order will be placed on the exchange. An order will be placed and it will be shown right here in the open orders. Now, in this case, I can't really do it because this is lower than the current price. So I will change this price, but I want you guys to stay here with me. We are still looking at this scenario where you are placing order at 106K. It's just we can't do it right now, but I want to show you how this looks like. So open orders, right? Open orders, limited market order. You see we don't really have anything right here. We have to go to trigger orders in order to see the order. So here is the order, right? It's an open order and it's only going to get executed if Bitcoin goes there, right? So if this happens when you are sleeping or when you are at work, you're actually gonna enter this trade and you're gonna profit from this. You see, you are going to enter somewhere right here, and by the time you see that you are in this trade, you actually have some profit. So this is basically when you use trigger orders. Now, the last thing that we have to talk about here is basically a stop loss. You guys always want to trade with stop losses, right? So I want to show you how to place a stop loss when you trade spots. So for this, we're gonna enter a small trade, right? Something like $100 trade, right? On Bitcoin, we're gonna enter it with a market order. So let's buy the Bitcoin, right? Bam, order place. If we go now to the order history, right here, we will be able to see the trade. So we have here order history for all limited market orders. And you can see that these two orders, these are the orders that we canceled, right? Because the field amount is 0. But this is the order that actually got executed. We actually bought BTC, right, for $100. Now, if you want to place a stop loss order, how do you do this? Well, you do it by going to the sell here and going to limit order and going to a trigger order and basically adding here the stop loss price. So we bought Bitcoin at 106,698. So let's go back to this previous example and let's say that we are buying this breakout right now. So I bought the breakout with the market order. I want to place a stop loss in case this trade doesn't play out, right? So basically I want to place a stop loss below this level right here. So if Bitcoin goes back into this triangle, this setup gets invalidated and I really want to be out of this trade. So the price right here is 105,646. So I'm going to put 105,646. Right, I'm gonna add here 100% of the BTC, right? And then I'm gonna click on BTC sell, confirm. So if we scroll down here and if we go to the open orders and to the trigger order, you can see my stop loss right here. This is my stop loss. This is basically my insurance that I'm not really gonna lose all of my money if Bitcoin just goes down to zero, right? If Bitcoin goes down right here and goes back into this triangle, my setup gets invalidated and I will be out of this trade automatically, right? Again, I don't really have to stay all day looking at the charts. I don't really have to like stay awake all night and not sleep. I just know that I have my order right here and I'm protected. If BTC dumps, I will be out of this trade. I will have a small loss. That's totally fine. It's part of the game. So that's how you play stop losses. And if you want to cancel your order, just cancel it right here. And now the last thing that we're gonna do is we actually gonna sell this BTC that we just bought with a market order, just because I don't really need it right now, and this was just for the purpose of this to show you how it works. So that's pretty much it, how you trade spot. I showed you everything for trading spot, the 3 types of orders, when to use which, how to enter trades, how to close trades. I just showed you how to close trade with a limit order, with a market order, excuse me, right? With a limit order is pretty much the same. It's just you're gonna enter here the amount at which you want to exit, the price at which you want to exit, which is going to be higher. So let's say that you want to exit 109,000. So you place it, you type the amount of BTC, it should be a sell order, and you click on BTC sell. So I showed you how to close trades, and also I showed you how to place stop losses with trigger orders. Alright, now let's switch to futures, and I'm gonna show you how to do all of this trading futures. All you have to do is to navigate to the menu here where it says futures and open it. What do we have here? Well, it's pretty much the same that you were looking at when we talk about spot trading. We have the chart, we have the order book, trading history. Here is the panel where you actually open the trades, and down here you will be looking at your positions. So let's start with the different types of orders right here. We have again limit order, market order, and trigger, but this time under trigger we have different options right here. So this is the first main difference between futures and spot. Another difference is this right here, this option cross. This is the type of margin, right, that you're going to be using, cross or isolated. The difference here, I mean, there are explanations and you can go through it, but what you have to remember is that if you are using cross margin mode, well, the reality is that if you get liquidated, all of the funds that you have in your futures wallet will be gone. While you use isolated, you're only gonna lose the amount of margin that you put in this specific trade, which led to the liquidation. If you are just a beginner, it's better to stick to isolated. Once you become an advanced trader, you will find out that using the cross option is way more convenient, and basically at that point liquidation is never really gonna be on the table, because you're gonna have a precise risk management where you're gonna know exactly how much money you will be losing if everything goes to hell, right? So liquidation is never gonna be on the table, and in these cases when you are that good, you can just use the cross margin mode because it's more convenient. But when you're just starting out, you can stick to the isolated. I personally use the cross option, as you guys probably saw from the videos that we went through earlier. So the margin mode, then you have here the amount of leverage that you wanna use. When you are just starting out, I suggest you to use 2x and 3x, right? And 1x. I mean, 1x is basically just like trading spot, but at least you can short the market, while when you trade spot you cannot really short the market. So 1x, 2x or 3x, right? When you are just starting out. Later on you can use higher leverage. If I go back to like the first trade that I showed you earlier, you guys can see that I actually use 20x on this trade, right? So I use 20x leverage right here, cross, as you can see. Again, when you are already advanced, you don't really have to use isolated. You can just use cross. You're gonna be all right. You never really gonna get liquidated. But when you're just starting out, you can stick to the isolated margin and lower, right? 1, 2 or 3x maximum. Don't go and do 20x like me, wanting to make quick profits, because you're gonna end up making quick losses, right? And you're gonna lose everything. By the way, if you wanna get an idea of how I trade, there are like hundreds of trades here, hundreds of videos of trades and screen records that I have here on my YouTube channel. So I suggest you just go ahead, the YouTube channel is As Income. You can go and you can look and you can analyze the different positions. Okay, so here he used that much margin, that much leverage, right? This is the entry, this is the exit, right? This is the type of leverage. You will see that for the most part I'm using cross, right here, same thing, cross. You can see it everywhere, it's cross, right? I mean, it's in some cases I have where I use isolated in the past as well. I believe this one right here, this short trade is isolated, right? So I mean, the margin mode is not that important, guys, especially when you know what you are really doing. What's important is the amount of leverage, and the most important is actually your risk management, right? You have to really have a good risk management system if you don't really want to get liquidated and lose all of your funds, especially when you scale, right? When you scale to 6 figures, to 7 figures, well, actually you're not really going to be able to scale without proper risk management because you're just going to blow your account, right? So to scale to 6 figures and 7 figures, I should say, you gotta have very good risk management system. Now that's about the leverage. Order types, you guys already know. When you use market order, you use limit order, you use limit order when you want to enter at a lower than the current price. So let's say that your analysis tells you BTC, or let's use this triangle again as an example. So you drew this and you are looking at it. Well, what is gonna happen next? Well, BTC, you draw from this point to this point, 2 points of interaction right here, so you expect a third one. Well, BTC is at 105k. Where is the line right here? 104 something. So you put here whatever your line is. You expect BTC to go down and then to bounce. These triangles, they normally break to the upside, right? Ascending triangles. So then what you do right here is you add the amount either of Bitcoin, or what I actually suggest you to do is to switch to USDT, because it's hard to know the amount of Bitcoin that you want to buy. You have to do lots of calculations, right? So amount of dollars. By the way, what I forgot to do is I forgot to transfer the funds. This was the first thing that we should have done, because we don't really have any funds right here, so we can't place orders. So we're gonna go to the assets right here, actions, transfer, and we're gonna transfer from the spot account in this case, because our funds are in the spot account. From the spot account, this amount we're gonna transfer it to the futures account, and now you see we have it available right here, and we actually can enter trades, right? So now last thing that you have to do is add here the amount of capital that you want to put in this trade. Let's say $1,600, right? So you have this scenario again. You want to buy BTC when it goes down here to this trend line. So you're gonna click on buy and confirm, and bam, you're gonna have the order, open order right here. You guys can see it. Now what's gonna happen next is that either BTC will go down to your price and you will actually enter your trade, or BTC will just not go there to this price. Now, like I mentioned earlier when we were talking about spot trading, there is a difference when you trade derivatives here, right? Because the reality is that here we actually borrowed some funds from the exchange, right? Which means that we're gonna be paying funding fee. Every 8 hours there is a funding fee, right? And sometimes the traders who are trading long positions are paying to the traders who are trading short. Basically, the funding fee, guys, the first thing that is important for you to understand is that the funding fee doesn't go to the exchange, right? The exchange itself, BloFin, they don't really get this money for themselves from the funding fee. They get the money from the trading fee, right? So when you use their exchange and you pay trading fees, this money actually goes to them and they profit from that. But from the funding fee, they don't profit anything. The funding fee is being given from one set of traders to the other set of traders. So sometimes the long traders are paying the short traders, right? While other times the short traders are paying the long traders, right? And this happens every 8 hours, right? So every 8 hours you either pay the fee or you get paid the fee, right? Depending on what's going on in the market. What is important for you guys to understand is that there is a difference between open order and position, which is right here. So again, you might get confused because we are talking about some things that are a little bit advanced, like most beginners who are just starting, they don't really have clue about the fees and anything like that. So just please stay with me and I'm gonna do my best to explain. So there is a difference between open orders and positions. Open order is an order that is just placed on the exchange but it's not yet filled, right? BTC is at $106,000. We place an order to buy at like 104. So until BTC goes to 104, this will just be an open order. And while it is an open order, you actually don't pay funding fee, right? Don't get confused here, right? While the order is open, you don't pay funding fee. Once the order gets open and it goes into the position right here, you will actually start paying funding fee. Let me show you. So let's cancel this order, and now we're gonna place a market order, right? Just so that you understand how this works. So we're gonna buy BTC worth $1,500. We're gonna buy long. We're gonna buy with a market order, right? Because I wanna show you how this works. So earlier, our order, when we use limit order, it was showing here in the open orders, right, under limit and market orders. Now you see we don't have anything here. But if we go to positions, the order is right here. For this, for an open position, you actually are gonna be paying funding fee every 8 hours, or you're gonna get paid, again, depending on what is going on in the market. Sometimes, so for example, right now I'm trading long. Right, I'm trading long. So during the times when the long traders are paying the short traders, right, I'm gonna be paying the funding fees. While during the times when the short traders are paying the long traders, I'm gonna be getting paid the funding fee, right? So there is a difference here. But it is every 8 hours, right? And you pay the funding fee for as long as you hold the position open, right? So if I close this right now, you see we actually have a decent profit so far. So if I close this trade right here, close, now is the time when I'm not going to be paying funding anymore, right? When the trade is closed. And also, if we go to the position history right here, we can see the trade in the position history. We can see it also in the order history. So for opening and closing this trade, I also paid trading fees. I pay trading fee when I open the trade, and I pay trading fee when I close the trade, right? And the realized P&L is $1.50. So you can see, by the way, when I point my mouse right here, you can see they give you data on what happened. The close P&L is actually $3.30, but I pay trading fee $1.80. So that's why my profit is not really $3.30, but is $1.50. So we made like $1.50 net profit, right? Net profit after the fees. So far I showed you how to open trades with limit order and market order. Another thing that I want to show you is basically how to place stop losses as well as take profits. Right, so going back to the example with the triangle. Price is right here at 105K. You expect it to go down to like 104, 500, and you want to buy right here. You want to open right a long trade right here because you expect this is an ascending triangle. You expect it to break to the upside and the price to go to 108K. So you place an order to buy right here. You want to buy for like $2,000, right? Now you can only do this, or you can already place your take profit and stop loss at the time of you entering the trade. And let's be honest, what better than this, right? What better than this? Because you're gonna be done. Once you do this, you are done with this trade. You can just walk away and let it play out. And it's either you're gonna make money or you're gonna lose money, but you don't really have to sit and look at the charts. So let me show you how you do this. You enable TPSL. This is take profit and stop loss. So for trigger price take profit, let's say that you want to exit at 100 slightly below this, the target for this triangle. So 108, 315. You don't want to exit at the very top like a sheep, right? You want to play a little bit smarter than the rest of the people who are using this same strategy and are doing the same thing like you. So you're going to do 108, 315. A little bit below for front running the sheep because they're probably gonna get eaten, right? It's probably not gonna go there. So this is your take profit 108, and if this happens, you're gonna make $73, as you guys can see right here. It shows you your P&L. For the stop loss, well, the stop loss, you can place it below this low right here because, of course, you guys want to be protected. There is no such thing like being sure. If you are sure for something, it means that you are doing it wrong. Nothing is sure in trading. So you want to have insurance, and your stop loss is your insurance, which basically means that if the trade goes against you, you're gonna be stopped out and you're not really gonna lose all of your money. So where to place your stop loss? Well, below this level is a good place, 104, 147. So this is your stop loss. Well, in this case, you're gonna lose $7 if your stop loss gets hit. So you are entering at this price, your stop loss is at this price, your take profit is at this price. One of the two things will happen. Either you're gonna make $73 or you're gonna lose $7, right? So once you click on buy long and you confirm, open orders, limit market order, this is your order, right? You can view your stop loss and take profit if you want to. You can modify it if you want to, right? And you will see, so let's say that you want to lower your take profit. Well, you click on modify right here and you actually lower it to like, let's say 107, and you will get the new and updated profit that you're gonna get if this trade plays out in your favor, $54, right? Or let's say that you are greedy and you wanna make more money, well, $92 you're gonna make, right? If you take profits, it's $109,000. So that's how you place take profit and stop losses. We can cancel this order for now. And the last thing is the trigger order. As you guys already know, you use trigger orders when you wanna enter a long trade at a higher than the current price. And in a moment, I'm also going to show you how to enter short trades. So let's say that you already bought right here, but you want to enter another position in case of a breakout. Well, guess what you're going to use? You're going to use a trigger order. So you're going to place right here 106, 310, whatever your trigger is. Market order you want to buy for $1,500. You can place a stop loss for this separate trade as well, right? And you always want to do this, and a trigger, and the take profit. So your take profit can be the same as the previous one. So what was it, like whatever, 108k something, right? So you're gonna make additional $30 if the trade plays out together with the other trade, 30. So the other 70, 30. So you're gonna make like $100 from this setup, and the stop loss is gonna be 105, 800, something like this. So basically, if it turns out to be a fake out and it goes back into a triangle, you're gonna exit and you're gonna lose $7. So this is another trade, right? But it's playing this same setup, right? So if we go to the open orders right here, you have to go to under the trigger and you will see this trade. So now we have two trades. I actually canceled the other one, but the thing is, if you didn't cancel it, you were going to have two trades, right? With the same setup, making a total profit of $100 if everything plays out as expected, and losing what? I forgot already. Losing like $12, $13, $15, whatever, right, from the two trades. I just showed you how to do everything for a long trade. For a short trade, it's gonna be pretty much the same. It's just in reverse, right? So for a limit order, if you want to enter short trade, right? So let's ignore this setup because it's not really useful anymore. So I'm just gonna delete it right here. Let's say that let me see if we can make a case right here where we are at resistance right here. This is a resistance. Let me mark it so it's easier for you guys. Okay, this is a resistance. This whole zone, actually, let me see if we can use a box right here. So this whole zone right here, this whole candle, this is a resistance. And as you can see, price is already being rejected from there. So you want to enter a short trade right here. Well, guess what? You can only do this trading futures. You cannot do it trading spot. So how you going to do this? Well, if you want to enter at the current price, right, you're going to enter with a market order. You add here the amount and you click on sell short in order to open this short trade with a market order. Let me actually do this. So I'm going to show you how this works. So we're going to enter this with a market order. And now if we go to position right here, you will see the trade. So this is the trade. This is our liquidation price. It's quite important, but you always are going to be trading with stop losses, right? So liquidation should not be on the table. And as you can see, the liquidation is very far from where we are right now. So we have here the pair, we have here the position size, the average price, the margin. So we have like $500 into this trade of our own money. The rest is borrowed money. So we have here the P&L. And that's pretty much it, right? We have here mark price, liquidation price. And if I go to the right here, you guys can see that I can actually add take profit and stop loss from right here if I want to. So let's do this now. Let's say that we believe that BTC will go down to 103,600. Well, guess what? This is going to be your take profit trigger, right? And if this happens, we're going to make like $47. So let's say that we want to exit at 107 and 170 like 500 or something. Well, if this trade goes against us, we're gonna lose like $7.66. So one of the two things will happen: either the trade will go against us and we're gonna lose like $8, or the trade will go in our favor and we're gonna win $47. So if that's what you want, you add it right here and bam, you have take profit and stop loss for this specific trade. Then from here you can just let this trade play out. By the way, you can see it right here. We have the stop loss, we have the take profit. This is our entry, so that's pretty much it. You are all set. Now you can just wait it to play out. If you want to close the trade for some reason, well, you can do so by just going back right here to the right, click on close all, confirm right here, and bam, this trade is closed. Now we can go to the order history and you can see the outcome of this trade. So we lost like $1.67. This is without the trading fees. If you want to see with the trading fees, you go to the position history and you will see that we actually lost on this trade a total of $3.50. So we lost like 170 for the P&L, from the P&L, right, from the profit and loss, and we lost like 180 from the trading fee. So a total loss right here is $3.50. That's how you trade futures. We basically went through all sorts of orders. I showed you how to open long trades, short trades, how to play stop losses, take profits. That's pretty much everything. Trigger orders, looking at the position history and order history in order to find out what fees you paid plus what P&L. So basically what's the total P&L, right? The total realized P&L. That's pretty much everything when it comes to futures trading. Now, save the best for last, right? Trading bots. This is what we're going to be talking about. Now, all you have to do is to navigate to the futures right here in the menu and click on trading bots, and you will be brought to this page where you can see the different types of bot available on the BloFin exchange. All of these bots are free. You don't really have to pay anything in order to use it. We have signal bots, we have futures grid, and we have time weighted average price bots. So I'm going to be honest with you guys. I'm not really interested in the futures grid or these ones. I only care about the signal bots. Over the years, I've tested like all sorts of different bots provided by exchanges, provided by platforms like Commas, and I found out that none of these bots really work over the long term. The only type of bots that I found out that are working over the long term are the signal bots. So I'm only interested in the signal bots. Now, what is the difference between signal bots and all of these other types? Well, the signal bots give you the most control, and you really want this if you want to be making money in trading. You don't want to give up control. So what do I mean by the signal bots give you the most control? Well, the way signal bots work is that basically you connect them to indicators on TradingView, and the good thing about that is that you can either develop your own trading indicator just like what I did, right? Or you can buy a trading indicator, or you can try even and use free indicators on TradingView. There are thousands of indicators. You have so many options. But the key here is that on TradingView there is something called strategy tester. And when the indicator is a strategy script, developed as a strategy script, you can actually use this strategy tester to test the indicator for all different time frames, for all pairs that you care about, for all the time, for the whole history of every coin. You can basically test a strategy and find out if it is working or if it is not working, right? And if it's not working, you can either change it and make it work and test it again and do all of this and do optimizations and things like that and make something that doesn't work, make it work, or you just give up on it and look for something else. But at least you know in advance, right? The thing here is that you know in advance what's going on and you have control over it. So if something doesn't work, you either make it work or you dump it, right? While when you use these other sorts of bots, well, they make it look like they work, and at first they're probably gonna work for a while, then they stop working, and then you are in the dark and you don't know what's going on and you are losing your money. I've already been there and I've done this with all sorts of bots that you can imagine. So if you want to save yourself time and a lot of money that you otherwise are going to lose in the market, just follow this advice that I gave you. Only focus on the signal bots. There are signal bots on exchanges like BloFin, Binance, BitGet. There are signal bots on third-party platforms like Commas, CryptoHopper, etc. Right? But the key is to stick to signal bots, because there you have control over the strategy which drives the bot. Right, you have control over that, and that's the most important thing. Right, now how this works, well, I'm gonna show you how it works in a moment. Basically, the whole idea here is that the bot on the indicator on TradingView sends signals to the bot in real time, and basically the connection that you do between the bot and the indicator, this connection is done via alerts on TradingView. This one right here, so you add alert, you connect the bot, and the bot is getting the signals from the indicator and it's executing it. Right, so let me show you how this works. So signal bots, you click on signal bot and you will see this add signal. On your side, you're not really gonna be able to see any of this because these are signals that I already added. On your side, it's gonna be clear right here. So first step first, click on add signal and give it a name. So normally what I'm gonna do right here is I'm gonna add the name of the strategy that I am using. So I'm using 5.0 MMNP. I'm using my own custom indicator. I'm gonna be, in this case, as an example, I'm gonna be setting a bot on a 15-minute time frame. So you can add a time frame as well. And long, it's gonna be a long bot. So we have the strategy that we are using, we have the time frame, and we have the direction. Is it a long bot? Is it a short bot? Now, you have 30 characters right here. If you want to add more details, feel free to add signal description right here. This is just optional, it's not necessary. The signal name is necessary, it's required to go to the next step. The description is not. I don't really add description, this is already enough for me. I know the strategy, I know the time frame, I know the direction, right? It's gonna be long or short. So I'm gonna click next, and this here we have two important things. We have the webhook URL and we have a piece of code right here, alert message. So these two things you basically are gonna need in order to make the connection later on between the indicator and the bot, right? But for now we don't really need it, so I'm just gonna click complete, and bam, right here I have the signal. The next step is quite simple. Just click on create a bot, and that's what you're gonna see. So here we have symbol, leverage, invested margin, available funds, advanced settings, and basically you don't really need multiple entry, but you're gonna need take profit and stop loss. First thing first, pair. Now, the thing with the bots on BloFin is that you only can set up single pair bots. What does that mean? It means that one bot can trade only one pair, right? There is a difference between bots provided by exchanges and bots provided by third-party platforms like 3Commas. The good thing about using third-party like 3Commas, which is also what I use, is that there is an option to set up multi-pair bots, right? On 3Commas, you can set up one bot to trade 200 different cryptocurrencies simultaneously. You can set up two bots to trade 200 each, which brings you to 400 different cryptocurrencies simultaneously, guys, right? While on BloFin you have to set up individual bots for each pair, and also on BloFin there is a limitation. You can only set up to 20 bots, right, per account. Of course, if you want more, you can create more accounts. The good thing about BloFin is that it's non-KYC, so you can actually have more than one account. And but it gets harder to manage, right? The more, the worse. So for example, if you wanna match me trading 400 different coins, where you gotta have 10 different accounts, you gotta have 20 different BloFin accounts, and this is like impossible to manage, really, right? 20 different BloFin accounts with 20 different pairs, and it will take you 3 years to make this whole setup. That's why using a third party like 3Commas, it has so many advantages, right? But this specific video, I have other videos for 3Commas and for what I'm doing there. This specific video is for BloFin. 3Commas also has disadvantages, right? And it's also not free, right? But when you are making money in trading, you don't really care about paying $20, $30, $40 for subscription per month, right? But if you are just starting out, you might find more useful a free option like BloFin, where everything is totally free. You don't pay any subscription, set up 20 bots, individual pairs. That's pretty much it. Now, let's get into the action. How do you do the setup? First, select the symbol. You see right here, they have lots of different coins. Unfortunately, you can set up only 20, so you have to select 20 out of all of these coins. So we're gonna start with Bitcoin, right? Select the leverage. The default leverage is 5. What do you want to use? 2x, 5x, 10x. It's up to you, right? So select the leverage, invested margin. This is the amount of money that you're gonna put into this bot. There is a difference between invested margin and position size, guys. You can put in the bot $200 and you can only let it open positions for $100 or $50. Or you can put $200, use leverage and let the bot trade with 500, 1,000, right? It's really up to you here. The point is to understand that there is a difference between invested margin and position size. This right here is not the amount of money that the bot is gonna be using to open trades, right? This is just the margin. So the minimum margin on BloFin is $50. You cannot go lower than this. You can set up a bot to trade, to open position sizes of lower amount, $10, let's say, right? And I'm gonna show you in a moment. But you have to put, for some reason, at least $50 in this bot in order to start it, right? If I put 20, no less than 50, error, you can't start it. 50. We have available funds right here. That's totally fine. Then advanced settings, entry settings, trading view signal, that's the default one. You don't really have to change anything right here. Multiple entry, I personally don't use multiple entries, but I do use stop losses, right? So we go with, you enable this, and if you use predetermined take profit targets, you're gonna be adding it right here. If you use, if you don't, you're not gonna be adding anything. I personally don't like predetermined take profit targets, and maybe some of you will wonder why. Well, let me quickly explain you why. When you use predetermined take profit targets, you are limiting yourself. Let me just see here if there is a good example. That's a great trade right here. So this is gonna be a great example. If you use predetermined take profit target, so this is the entry, by the way, from our bot. This is the exit from our indicator. Now, let me just bring my tools right here. And let me show you this. So what people do, and this is a bit of a mistake, they use predetermined take profit targets like 1-to-1 or 2-to-1 or something like this. Let's use 2-to-1 in this example. So this is a 2-to-1 reward to risk. If I use predetermined take profit targets, right? So this bot at the moment is set up with 0.65 stop loss. So if we go back to BloFin, 0.65% stop loss. So 2-to-1 reward to risk, it's gonna be a 1.3. So 1.3 percentage take profit, right? 0.65 stop loss. So this is how it looks like in real life. 1.3 take profit, 0.6566 stop loss. Okay, there is a problem. This is, by the way, 2-to-1 reward to risk. Many people even go lower than this. The problem with that is that you don't really know it. I mean, when you are just entering the trade or when the bot is entering, doesn't really matter. You don't really know what's gonna happen next. But if in real time you are looking at this, why would you exit here? Right? Why? There's no really reason. This is just a sideways consolidation. This is actually bullish. Why will you cut your trade here if you can make like 2 times, 3 times, 5 times, 10 times, 100 times more money over the long term when you take in consideration compounding effect, right? Why would you do that? It's a huge mistake. Many beginners make these mistakes. Well, guess what? I don't use predetermined take profit. I program out my indicator and my bots to basically analyze the market in real time, candle by candle, and in real time to look for reasons to exit a trade. So you see here, was there an exit right here? No. Why? Well, because when you look into this in real time, there is no reason to exit, guys. There is literally no reason to exit. Why on earth am I gonna cut this trade right here if I can make like 5x more money? It doesn't make sense. And yet people do this predetermined take profit target. Well, it's not a good idea, because you can actually ride this trade, make more money. Is there a reason to exit right here? The bot again is analyzing candle by candle. No, it makes no sense. Bam, another wave up. Again, candle by candle. There's gonna be another wave up, or it's gonna send an exit signal, one of the two. The point is that 2-to-1 rewards, even if it does send an exit signal here, well, look at the difference. 2-to-1 rewards to risk. If you use predetermined take profit target, and actually if you are at the top of the best traders who use this, because the reality is that many traders have much lower rewards to risk, right? Why would you settle for this if you can make 5.56 reward to risk, it's almost 6 in this case, 5.65 reward to risk, right? So it's almost 3 times more money. It doesn't make sense. And this is at this point. This probably gonna go up, and it's gonna be more and more and more and more. And when you compound all of this, you get the idea of what's going on. So that's why I don't use predetermined take profit targets. But of course I use stop losses because it's quite important. Sometimes this will go wrong and the trade will hit the stop loss. If you don't have a stop loss, you are risking everything that you put into the bot. So once you have all of this thing figured out, and by the way, you figured out percentage stop losses and things like that by doing lots of testing with the strategy tester right here. Different time frames, different pairs, everything, right? You test everything in order to figure out the best percentages and the best thing to do. So once you have all of this figured out, you hit on create bot, confirm, bot created, perfect. Where can you find the bot? Right here, trading bots. This is where you can find it. Now we have the bot up and running. My question to you guys is that is this bot actually going to start opening and closing trades? Is it going to start trading? It's up and running. Is it going to start trading? No. Why? Well, because I haven't connected it to the indicator on trading view, right? So this bot, even though it's active, it's not really going to enter any trades. You see this signal triggers, it's 0 and it's going to stay at 0 because I have to connect it first, so the indicator starts seeding the bot with signals, right? And the bot starts taking these signals. So how do you do this connection? Well, going back to these 2 important things that I showed you earlier, you can find it by going back, finding the signal, clicking on more, edit signal, you can find these 2 important things. Webhook URL as well as the alert input message. So you copy this, you go to the indicator that you are using on TradingView, you place alert on it, right? You open alert, you go to the alert message right here, alert message, paste this piece of code right here, then go back to notifications, go back to BloFin, copy the webhook URL, and paste it right here. You see, I lastly set up bots for 3 commas. That's why I have the 3 commas webhook URL. But you can change. By the way, if this is disabled, just enable it. It's probably going to be disabled on your side. So enable it, paste the code right here, go back to the settings and click on order fields only, right? And then hit create. Once you do this, there is now going to be a live connection between the indicator that you are using on TradingView and your bot on BloFin, and the bot is actually gonna start entering trades. So when your indicator starts sending all of these signals, right? So this is Bitcoin, this is Cardano, this is Doge. By the way, you set up individual bots for all of these pairs right here. So we just have one for Bitcoin. You actually do the same thing, create bot, Ethereum right here, confirm, a leverage, invested margin, you add the amount of money, take profit stop loss, 0.65, whatever your number is, create a bot, confirm, 2 bots, 3 bots, you can go up to 20 bots right here, and you connect each bot. By the way, you have to make sure that you are doing the proper connections. So when you are setting bot for Bitcoin on TradingView, you go to the Bitcoin chart, the BloFin chart, BTC USDT, BloFin, right? Perpetual swap contracts, because this bot is trading futures. BloFin, you make sure that you are on the right chart, otherwise your connection will not work. So you set up the alert when you are connecting the Bitcoin bot, you make sure that you are setting up the alert for Bitcoin. When you are connecting the Cardano bot, well, you make a bot for Cardano right here. Let's see if it's available. Right here, confirm. Again, add the money, add everything, add the stop loss, whatever it is, create the bot. So when you are connecting the bot, the Cardano bot, you are on the Cardano chart. When you are connecting the Ethereum bot, you are on the Ethereum chart, BloFin chart, same time frame, everything same that you are setting up the bot for, right? And you make this each alert for each separate bot. Once you are done with this, the bot will actually start executing trades. One thing that I forgot to show you before you set up the alerts is that if you are using a good indicator, you're gonna have the option to add the position size within the settings, right? So if I go to the settings, initial capital, whatever your initial capital is, order size, you add here the order. This is actually going to be the position size that the bot is going to be trading. So if you want the position size to be $10, add here $10, make sure it's USDT or whatever stable coin, but not percentage of equity or quantity. So USDT. Now you do this in the settings of the indicator before you place the alert. After you place the alert, basically the bot will start working, and then it will be using these order sizes from the indicator, right? The good thing about this is that you can use a strategy tester to test and see exactly how much money you are going to make in the past with whatever numbers right here. You can see the drawdowns, you can see everything, right? So that's about this. Now, indicators on TradingView. Well, you can create your own, right? You can buy already developed private one, or you can use the public one. If you go to TradingView and you search for strategy, right, there are plenty of indicators right here. Strategies, right? Because for this you need a strategy script, right? You need an indicator that is a strategy and has this thing to it right here. Now, if you search for hour, you're not really going to be able to find it because these are private. You see this one right here is invite only script. You're only gonna get it if you get access to it, if we give you access, right? So you're not gonna be able to find it here and use it, but you can find lots of free indicators, do lots of testing, figure out what works, what doesn't. Again, you have control. The key here is that you have control. While when you use bots like the other one that I mentioned in the beginning, where you don't really have control, because you don't really have much control here, and you don't really know if this is profitable or no. Yes, they give you some numbers, but how do you know if these numbers are correct? While with the strategy tester, you know that it's correct. You can easily confirm by manually checking it, right? And it's simple math, it's correct, right? So that's pretty much it, how you set up the bot. Then if you want to analyze and see what's going on with the bot, where you go to the details right here. So click on details and you're gonna get lots of details. You will see lots of things right here. You will see the ROI here, a graph of the ROI. You can adjust investment, add more money to the bot if you want to add margin. Let's say that you want to add $200 more margin. You can also, so this bot is gonna have like 250 now. If you want to reduce margin, you can do the same, right? So I can get back this money right out of the bot. Then right here, current position, open orders, you will be able to see all of the current positions, the open orders, everything right here. You can add manual order if you want to. If the bot for some reason misses a signal or something like that, you can add a manual order right here to the bot. You will also see the event history, details of what's going on, position history, funding fee, transfer, everything here, history of everything you can see. If you want to stop the bot, you can stop it from right here, and the bot will stop working, and your initial investment will go back to your funding account.